Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. Whew, man, is January flying by? We are talking about January 18th. It feels like we were just talking about New Year's, and wow, we are already over halfway through January already. It's amazing how time is flying. And today is one of those days where there's been plenty of fireworks, and we kind of saw it coming. If you guys were attending the morning session today, you knew a lot of what was going to happen based off some of the data we saw and some of the market reaction to it. So we'll kind of dive into it and explain why there was such an amazing reaction, such a, I don't want to say harsh because it was kind of expected, but kind of such a forceful drop inside of the markets in the beginning today. And we'll go from there. So yeah, can't believe January 18th. I see that and it just blows my mind. So before we get into anything, for those of you that don't know me out there, again, as I mentioned, I'm the president and CEO of Keep Trading Simple. I've been trading since about 1999, the whole Y2K era. It's funny, a lot of people are like, what's Y2K? That's how you can tell you're a young trader. But been around for a while, started, just like many of you out there, started in the stocks and traditional options realm. About 6 years in, found foreign currencies and fell in love with that market. I love the leverage, love the 24-hour nature of it, love really the global aspect of it. Learned to trade futures, became a financial advisor. I used to work for one of the big three banks. Got a great education in kind of what bonds were and how important bonds really were in the grand scheme of things. And most people don't even fully understand that yet. And realized that it was very much not what I thought it was going to be. And left that industry, decided that my true passion was really out there. Again, helping people learn to trade the markets has really been what a passion of mine has always been. So with that said, I've been now kind of doing presentations for Nadex almost 4 years, I guess. About that time, it's amazing how fast it flies. But my goal for every one of these sessions is for you guys to get some type of a golden nugget, look at something differently, and really kind of just advance yourself as a trader. It's pretty simple, right? Pretty simple. If you have any questions during this presentation, you're more than welcome to kind of type it in, answer it in chat, and I'll do my best to answer it. And if not, again, I'll get to that answer later on down the road. You guys are more than welcome at the end. I'll give you my email address. You're more than welcome to contact me directly if you like, if there's anything that you weren't sure about or had a question with today. With that said, let's go through the disclaimer real quick, because obviously we're talking about money and things. We got to make sure we cover all our disclaimers in there, especially because this is sponsored by Nadex. Trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost to enter the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Now, past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Actually, I need to update that one. All right, so here's our agenda today. This is what we're going to cover. Very simply, we're going to cover the upcoming news events. Obviously, the news events this morning is kind of what set everything off. The Empire State Manufacturing Index, and I'll go through that in a second. And we'll look at the rest of the kind of events that we need to kind of watch out for the rest of the week. Then we're going to dive into indices, and like I said, they all kind of plummeted. VIX was, up like 12, 13, 14%, something like that before the open even happened. So it was a telegraph red day today. And then we'll dive into Forex. Forex has been much slower today, kind of coming in strong dollar. This is how we've been starting every week this week, or the last, really in 2022, but really even at the end of December, we're coming with a strong trend on the first trading day of the week. And then we'll cover commodities. Oil, obviously, almost, pushing up in that 85, 86 range. We talked about that last week, and we had a nice little short as Sunday night opens, and then again, obviously, everything reversed this morning. And then other commodities out there, gold and silver. I hate to say that it's not a manipulated market, but yeah, looking at the price action this morning before the news release, it's kind of really hard to say that that data wasn't leaked early. When you're looking at the action, how price tanked 30 minutes before the news, and then there was such a huge explosion in price after that. It just means that the data was out there. But again, could you have traded that? Again, traded with that big money? Absolutely, absolutely. It's the the 10-3-5. The 30, 10, and or actually I guess it's 35 and 1 that we talk about. A number of different time frames you would be able to see. So we'll cover that briefly today as well. With that said, let's go right over into this area right here. So first things first, the big news we were talking about today was that Empire State Manufacturing Index. I mentioned it for the kind of quick presentation earlier today. Empire State Manufacturing, it's not one of those numbers that, it doesn't go up there with non-farm payroll or retail sales, but it's typically a number that stays on more of the positive side. I showed this earlier as well, just show it real quick here. You can see it's one of those things that, as long as it's positive, the economy is, getting better, right? The only time we saw negativity with it before was really kind of back when COVID was really the initial surge. This is what it is. It's a pandemic. We're going to start closing down. People are going to get this. And it kind of had a very, very fast drop, 21.78, 48, minus 0.2. And since that time, been nothing but positive. And we've had ups and downs. I mean, there's no ifs, ands, or buts. We've had some ups and downs, but the number actually turned negative. Again, which manufacturers, when they're looking at it, they said that, this is basically showing that we have worsening conditions in the economy. Okay. Now, that could be a lot of different things. That could be, talking about how the Fed is going to be, doing things with the balance sheet, raising interest rates. I mean, all of these are things that manufacturers are looking at going forward. They kind of know what's coming. So people are like, oh my God, is the economy bad? Yeah. I mean, I wouldn't say that it's horrible. I mean, none of the earnings besides banks are coming in bad. And the banks they have less profit, but I mean, they're still making $4 billion, right? And it's because that, the markets weren't as volatile as they like. They love the volatile markets. But again, when it's a negative number like that, not really the way to cap off the morning. And again, this is kind of manufacturers also looking ahead at what is rising interest rates and that kind of stuff. So that's it for today. Tomorrow, looking for the rest of the week. Tomorrow we have some interesting data across the board. A lot of CPI data, right? We have the CPI year over year for the pound, also way up above the range that they would like it in. Again, it was 5.1 before, continuing to rise. And remember, the pound has already done some interest rate tweaking, right? They've already messed around with the interest rates, and it's continuing to rise. And this is what I keep going back to. I do feel that the United States, when we raise, that first one, I'm not going to be surprised if it's a double versus a single. Because again, seeing this rise even after the fact that they've already started to mess around with this, just goes to show you that it's going to take a little bit more. Now, CAD CPI month over month, this is actually picked to be a negative number, but the year over year numbers are, again, the medium, the trim, the common, all of them are technically above their 2% target. So it is something that's kind of going, a bit higher. I wouldn't actually be surprised because we saw some great data out of Canada last month with their employment numbers and everything. We'll see what the CPI comes in as. I'm actually expecting this to be kind of a miss at the top side. I mean, maybe I'm wrong. Maybe it's even more negative, but I don't think that's going to change anything because all of the year-over-year numbers are well above. And, again, Canada will be at a disadvantage if every other country is rising interest rates and theirs is not. So, kind of one of the things I'm kind of expecting this to be a little bit of a miss, or these to be a miss higher on the top side than what this lower was. And I do think we will have some Canadian strength tomorrow coming into the markets, especially after today. With the dollar getting strength today, be a nice little reversal back in the things like the dollar CAD. Bailey speaking at 9:15. Again, Bailey doesn't necessarily always speak when it's in U.S. trading hours, but 9:15 is a great time. It's right around the open. So again, this could provide some action in the dollar pound, or the pound dollar, or the pound yen. Both could be great opportunities. And then tomorrow night, love these nighttime releases, 7:30 p.m. You gotta love that time. Easy to trade. No U.S. influence to it. Employment change and their unemployment rate dropping another 0.1. Could be interesting. Like I said, I think these are great trade setups. It's typically one of my favorite ones to trade. Again, for a Wednesday night, if you guys don't have anything else to do, this is an absolute trader. You definitely want to get in there and get involved with this one. Thursday. You'll notice that we have crude oil inventories. You're like, wait, what, isn't that Wednesdays? You're right. It normally is on Wednesdays, but this week it will be on Thursday because obviously we had the Monday holiday. We do have other things in here too. We have the Philly Fed Manufacturing Index. Remember, Empire State Manufacturing Index is the New York area, the 200 manufacturers. So the Philly one should be kind of an interesting, again, this could, although not really a major release, the prediction today up here with the Empire State was that it was going to be 25 and it came in at minus 0.7. The expectation for Philly was 18.9. If 25 was a big miss, could we have another monstrous miss over here as well? It's got the potential, and really, I mean, unemployment claims, again, they were a little bit higher. Existing home sales, not really necessarily the biggest mover. And then, oil inventory report with, oil the way that it is now, that could be another opportunity, again, particularly with the negative number, that we could have big shorts on Thursday morning. So could provide some good opportunity. Friday, we got all kinds of stuff. We got retail sales coming in less than expected, or lower than what it was previously. And again, the time of year, that's not necessarily uncommon. But again, that could definitely be something that moves the pound around, set us off on a European session slide. Then CAD has their retail sales. Again, expect to be lower than previously, but not as much as the pound. So that's why I'm saying I think some of the data up here for their CPI is a little bit off. I think we could have something there. And then, interestingly enough, we had Treasury Secretary Yellen speaking. I guess she's bumped back up to an orange, but lately, typically whenever she says anything, it just is kind of completely glazed over. There is really not any other news that day, but we'll see. We'll see. Who knows what she's going to say? She's made some, she's speaking at the World Economic Forum. I don't know. It's funny. It's the Treasury Secretary's job to communicate to U.S. presidents economic policies, right? So yeah, it's kind of interesting. The Fed is what determines interest rates, not the president. So his economic policies, thus far, his lowest rated job approval has been in the way that he's handling the economy. So I don't feel that, although she's marked that, I don't think that she's going to say anything that's, it often signals a signal in policy shifts, right? We already kind of know what's going on, right? We had testimony from, the Fed president and the vice president, right? Basically the vice chair. We know what the FOMC note said, right? I don't think there's anything that she could say over here that would really be necessarily earth-shattering. And even if she says it, again, the Fed is what really controls where the economy is going, not necessarily the president. And again, especially with the way, with the low approval rating for how Biden has handled the economy, I just don't feel like she's going to pack a lot in there. So it may be wrapped into other things that day. Again, after the manufacturing, if we take a big red on Thursday, we saw unemployment claims rise, home sales not come in, and crude oil inventories come in. Friday could just be nothing more than a reversal from what we see on Thursday, right? But I think right now the biggest day, the most opportunity for trades is going to be Wednesday. Obviously, with two big CPIs, Bailey speaking right around our open time, and then Australia at night. I think that's got the most boom for most boom right there coming in for any days this week. Currency realm right now in general, all we're seeing really is dollar strength. Again, we're seeing it versus the euro, the pound. Dollar again is a little bit flat, although it's been reversing. Swiss, you're seeing it. CAD, you're seeing it. Aussie, you're seeing it. And again, pound yen, obviously this is yen strength coming in. And again, you're seeing a little bit of again, pound strength versus the euro, right? But you're seeing it down versus the yen. So it's really, the dollar yen is really kind of the dominant pair right now. And again, it's really dollar versus yen. You can see that's flat. And you can see, 83 is a decent move from the pound yen to the downside. And again, also we'll see Aussie yen and euro yen coming up as well. So yeah, it looks like it is the U.S. economy is really what is dictating all right now, really across the board, and we're just seeing weakness in other places. Looking at kind of the big headlines out there, you're not seeing a whole lot. The biggest thing was this empire, and it's funny. Magically over here, if you look at, up here it's orange, but now down here you're like, no, it's red, right? So kind of a big deal, and that's really a bit, right? The BOE's next move is more, is more than an interest rate hike. So this is kind of with Bailey speaking. I think, again, I've been saying it for a while. I think pound strength is where to go, but I think that's a big one. So, all right, let's jump into the charts. I think the first thing we need to start off with is really VIX. Again, VIX is tradable through traditional options. If you're trading it, you're not trading it through Nadex. You are, I guess, in some sense in the VAS spread, but you can trade the VIX in general, but it's not necessarily a supply and demand based asset that you can trade. It is a gauge. It does, options pricing is always done off the volatility though, off the volatility index. So it is important in that sense. Having it up 14.9, almost 15%. Typically, if you want to say, wait, why are all indices red? Well, it's because the volatility is completely jacked. Whenever the volatility is going higher like this, and again, we talked about it earlier today, we were at 10, 11%. We expected a big red day, and everything is basically doubled. Actually, it looks like Russell has tripled at this point. Even YM, we talked about this getting crushed at the open, and they're all down much more than they were. They were all at that 0.8 there. ES is about double what it was when we started this morning. So again, holding VIX high, really Empire State, and there's a few other things going on in the world, but I think with seeing, whenever you hear that the conditions are going to get worse, it's hard to determine what exactly that means. And that's why the retail traders out there looking at it like this. So where we are, we're peaked, coming above this 22.5, 23 area. we talked about it before. I mean, we expected pullbacks here. We had big pushes. I wouldn't say there's anything earth-shattering this week, news-wise, for the U.S. Last week, we were super, super heavy on news releases. This week, not so much. I think really once this starts to tear back down again, and just like we had it marked over here, I don't think it's really any different. I think we're going to start to see this push back down to the whoops, not a reg. I would expect we see this to kind of push back down. I mean, if you think about it, I mean, even with Yellen on Friday, I mean, what can she say? Inflation's at 40-year highs. Yep, we already know. The Fed should balance, we should start tapering the budget, stop buying. Yep, we already know that. They should raise interest rates to lower inflation because it's hurting, the people that on the lower economic spectrum. Yeah, we saw that. Inequalities at a 40-year high. Yep, we knew that too. So in reality, a lot of the big bangs and things like that, even her, what she could say, a lot of it's out. So I think tomorrow with, I don't know, I mean, unless the tsunami that hit Tonga, you'll see down, down here, the Tonga eruption, how it impacts. So, unless, Los Angeles gets wiped out, I believe the volatility will come back down tomorrow, and we should see a bit of a reversal. Just really kind of once this first day. And again, part of the volatility, the VIX being so high, is because everything is so red, but vice versa. Once you started to see kind of, you knew this gap was coming, you knew all these were going to accelerate down again. That's typically what it shows you beforehand. So it's kind of it's like a crystal ball and a self-fulfilling prophecy all at the same exact time. It's like a snowball going down a hill, and that's what we're seeing right now. So, overall, again, I think we'll mention the dollar too, because with the dollar rising, it's kind of the same thing. You may say, well, why the heck is the dollar rising, right? Look at all these indices, they're all red. Yeah, I mean, it's one of those things. You see horrible news like the manufacturing index, and you're like, you know what, the Fed's not going to do anything. Look at this. The economy is getting worse. They can't raise interest rates. I don't know. Are the interest rates, are they rating the economy is getting worse because of the interest rate rises or because of something that's fundamentally changed? I mean, all earnings look great. Nobody ran out of toys at Christmas. Looks pretty good. But if people look at that and say, oh, the economy's getting worse, they're not going to raise interest rates. They're not going to start a taper. They couldn't possibly do that, right? Then it's every reason in the world that we're going to see even more inflation. We're already at 40-year highs. Again, you'll see strength coming to the dollar. And again, or I mean, vice versa. It could be, this could be because, gold and silver are spiking because they're like, oh my God, we can't change it. More inflation is coming. Or they can say, you know what, the manufacturers realize that interest rates are about to rise. There's our confirmation. We're seeing fundamental change now as they're starting to, that manufacturers are now on board with the rate change. And again, that could be the other reason why. But, if we look to see where it is, 95.74, again, we're not changing the dollar index, directly, but you can see, I mean, there were sellers coming in at the same area. And after this huge, strong push up that really started, European session really kind of kicked us off. And it was right here at 3 o'clock in the morning, right? You can see the Europeans basically sent us in one direction. We should be looking for somewhat of a reversal at this point. And again, if not here, there is another one up a little bit higher at that 96 area. It's only about 25 cents more. So, we've seen this strong whether up or down movement on the first trading day, and then we tend to see reversals. It's something that's happened again and again and again and again. So I really wouldn't be surprised, again, once again, see the same type of pattern happening. And where it is after all the big pushes, everything we've seen, yeah, I mean, I think at this point, if we start to kind of roll back over, look for dollar weakness across the board as profit taking is occurring across, all the different assets, right? So let's look at the indices first off. Earlier today, let me drop this down to a 15. That's where we do our analysis. We talked about different areas being hit. And earlier this morning for Nadex, we were sitting right here and we said, these black lines, just to review with everybody, these black lines are large psychological levels. They typically are ending in 00. For some of them, we can, we could do it off 50s and 25s. It's based off of quarters theory. But the reason why you're seeing, magically how it just rides a level and then comes down and hits this next level and stops, you're like, why is it doing that? This was 4,600, right? 4,600 is a big level. Now you're seeing it come down, and we'd actually marked this level here, the 54.70, 450. It was an area in the past, the last time the price had been down here, that's where we were using to draw our fibs back when, back here last week. Last time price was here, we saw buyers step in, and that's exactly, and again, this was black because it was our profit target to the downside. That's exactly what we ran into. At 11 o'clock, we hit it again at 11:30, and we kind of hit it again at 12. And we've been kind of hitting it, but you can see that it's kind of running out of steam. Now, we are in lunchtime, but earlier for the Nadex presentation, when we started, right, we started this morning at 8:45. That's where price was right here, okay? And I mentioned, looking at the VIX this high, the retail trader, it really wasn't doing much. The Empire State Manufacturing had not kicked in. So I hope a lot of you were able to get short at the open today and really ride this back to the downside. And the same target is what we would have been shooting for. But again, with all the basing in here, you saw this base come in at 8 o'clock. It pulled back, and right when the news came in, you're like, nothing happened with the news. It was just because the retail trader couldn't get in. You can see that right here at 9:30 is where the acceleration really took off. A pullback, basically stopping everybody out that got short after this big rundown in price. And then at 10:30, bam, we continued to push lower and ended up hitting that full profit target. So I would say interesting level. Again, it's been hit. It's not really piercing very, very deeply into it. Where we are now, 12 o'clock, it's probably due for a bit of reversal. There's no other news today. I would say after as negative as it is today, I wouldn't be surprised to have, again, maybe some type of an end of the day push up again. If we look into this, and I'll click it and we'll go into really just, even low level things. You can see like what's going to happen the rest of the day. We have our tick long-term purchases, not really a big mover, and that's it. There's nothing. So, oh, here you go. Fed cancels bond buying plan today, blames technical difficulty. I always love things like this. Like, oh, we're not going to do any bond buying today. Yeah, but you make up for it the next day. So it doesn't really, it's not an earth-shattering deal breaker. So I would say, as far as the 15-minute principle goes, this is a level, it's been justified. We now have a higher low putting itself in. Could this be a potential reversal? Yeah, it could be. But I think it's an important level to watch out for, particularly, again, once volume starts coming back in after the lunchtime hour is over, I think we push back up. Trying to mark off kind of this big fall. So let's take the old fib off, and we'll kind of draw a new one on just so we can get some reversal levels back up. We're going to do it from here and drop it. So it looks like, in looking at this, you can see, again, these big black lines are the psychological levels. Typically, when we're drawing fibs, the first thing I'm going to look for is the 50. It's an easy level. A lot of people grab it. The 50 is sitting right here. Okay. If you look to the left of that, you can see that there was a lot of movement, a lot of spacing, and again, a nice little punch to the downside. So I would say right now, with any type of reversal, it'll be a profit target first before it's an actual reversal level. But I think this is something to point out. So let's kind of put a tag on it. Yeah, 45 or 46.54 is kind of that level. Now, again, if we start to reverse back up again, could that be an area where people get back in? Sure. It's a 50% reversal level. Fib traders love that one. Another one that fib traders like is the 23.6. If you do this full draw, check this out right here. There is your 23.6, right? So again, two potential levels where we could have sellers coming back in, particularly people that really like fibs. Again, two of the most very common, again, pullback levels. Everybody tells you, get in on the pullback, right? Well, we'll pull back off of a level of buyers. And again, if we pull up, this probably won't last another hit. But if we start to pull up, 46.09 is the 23.6 and 46.54 again, strong push out, both of them at major fib levels. So keep those two on your radar. NQ all kind of all over the place, right? Your 9:30 candle was here, and this one popped up. And I mentioned this earlier as well. We saw Microsoft making a play and purchasing Blizzard Activision, right? Blizzard Activision. And again, you may say, what does that mean? Well, they paid $68 billion in cash, right? A lot of money. And you may say, well, all right, who the heck is Blizzard Activision? Why should I know that? If you know anything about the gaming space, and again, during the pandemic, games became a lot more popular than they were before. Esports is kind of the next big thing. But Blizzard is the owner of World of Warcraft, Call of Duty, Diablo, Overwatch, a big esport group. Overwatch 2 is supposed to be coming hopefully in the next year. And then a game that a lot of people that really, if you think about it, think about the mobile space, right? Mobile space. What was the first big mobile game that like took over your cell phones? Candy Crush. Activision Blizzard also owns Candy Crush. So there's a lot there. It's a big deal. They paid I think like a 40% premium. This is a big space. Mergers and acquisitions, we are back in, right? This is a new year. You'll see these things. And again, probably why you got the initial push, because that's a lot of money to throw around. But again, easy short here. You knew the markets were going to tank. All it did was literally drive us right back up into a level of basing that was established at the European Open, and bam, straight back down again. And where do we go back down to? 15,300, the same level, dotted line that we talked about before. Again, psychological level, hit it, was basing on it. Next level to the downside would be 15,200. I do think we get down there today. as this continues to accelerate lower as well. And again, with Apple and Tesla both being down, Apple down big. And again, Apple's probably down because I think, wait a second, Microsoft is making moves. Not that Microsoft and Apple should really be in the same discussion anymore. They really need to be kind of separated. They used to be direct inline competitors, but I wouldn't quite put them in the same category anymore. They've kind of separated in kind of their core businesses. But again, seeing something like that, again, it's going to move Apple more because there are other people that remember that battle. And then again, Tesla down, not down huge, right? Down 0.6. But if you look at it, there was from where the open was, there was a huge spike up in price, and we're actually sitting at higher than what we opened, but obviously lower than where we closed last week. So, but again, nice surge forward, and then again, as it's pulling back from that parabolic move. So, I would say, watch NQ. I do think we go lower in this one. In a grand scheme of things as well, let's reverse this up, and we'll switch it now and talk about potential levels back to the downside. We're gonna pull here down. I would say it's kind of the same thing. The 23.6, it's already marked off, right? We already had that level what we ran into this morning. Guess what? Happens to be the 26 pullback. And we look at the 50, look at the same thing. Pull up and look at this. Here, there was a basing here, right? There was a base that started here. There's a base there and a base there. So again, the 50% retracement is also a hotspot. And again, I didn't even have this fib drawn on here. And again, magically, it is also the 23.6. So again, levels in Q that you're looking for is 15,420. And then again, 15,618 to the downside. And I do think this is justified to go lower. I do think we had a profit target that we're looking for 15,155. Wouldn't be surprised if it gets that low. Okay. YM. So Warren's on YM, and we talked about how this one had a little bit of a basing. We were looking for a Harry Potter. We had a couple breaks in here. Again, this was hit number 2. This is hit number 3. We expected it to break, and it did. It hit it again. It came back in base. It's like, oh, give it to me. And then when you saw where the basing was, it was actually just ahead of the level. We hit it here. It's like, yeah, you got to get in. And again, 745, it went down, and it kind of held right here. You're like, you got, every reason in the world to get short. And I mentioned this morning with the YouTube presentation for Nadex, looking at, where is it? Let me pull this down, take this off. Empire State Manufacturing Index. See the M, manufacturing. You see manufacturing, you think Dow. Here was the reaction as soon as the market opened. There was 915 and straight down. So I would say where we are right now, 15,196. We've just broken through that psychological level of 35,200. I think you got to look at this one and look to see if we're going to ding 35,000 today. I think it's on the radar. I think absolutely it's going to be the next big slowing point would be right down here. Look at that, dead on. I don't do that often, so I'm gonna celebrate it a little bit. I think we come down to hit 15,000. Like I said, Empire State Manufacturing, not good. We got Philly later this week. Right now, the Dow is the strongest of all. It's only down 1.63%. And again, after the initial surge, it was like, what do we do? What do we do? What do we do? What do we do? Your 1030 reversal came in right here. Didn't really give us much of a reversal, and we started the roll again. So kind of the same push on this one. We can draw fibs from this one from kind of its peak down. And you're seeing, magically right where we have this line too, it's flirting right around the 30. Looking at where the 50% retracement is too, the 50% just happens to be right on a black line that we already had drawn right at 35,800. Again, psychological number ending in 2. So it's got some decent pullbacks. I'm gonna take this one down and kind of bring it to a little bit of a lower level. I'm trying to see. I want to do the push just the market hours. Yeah, 9 o'clock right there. Yeah, I was trying to see if we had gotten back up on the 5th and we haven't. So let's see. Actually, I'm going to pull a fib from really here where we kind of had this. This was the first, we kind of broke a lot of stuff here. So I'm going to actually go fibs right here. That's what I was curious about. Yeah. All right. So if we take the last kind of pivot high, right? Because again, we broke through it here. So that was kind of a new kind of trend established. We broke through a couple levels. Taking from here, all the highs and lower after that. The same level that we dropped through here at 35,546, call it, I would say is probably another potential trade setup. I love the basing. It was the trigger this morning anyway. But if we look to see where we are right now, and again, there's definitely some buyers in here. Even if they break, which again, I do think we break, we come down to 35,000. I think this 35,546 is the level we need to watch out for. if we can get up to there, could be a nice little potential short. If we take this down to the profit target lower, it also puts us kind of in that range between the 50 and the 61.8. So I think you got to watch out for it. But on a purely supply and demand basis, I love how it based. I love how it came up. I love it explosion out of it once traders came in. Again, I love how we're pushing back down to this whole number. So a lot of things I like about that one, especially to the short side. Harry Potter tomorrow. Tomorrow, basically, Harry Potter is a confirmation pattern. What a confirmation pattern is when you have a level like this is a lot of traps that exist inside of the market are trying to play through people using things like support and resistance. Okay, when prices come down, a lot of times, like one of the common things that people use with support and resistance, and they come up with catchy slogans, right? I don't use support and resistance. I don't believe in it. I use supply and demand, which is different. But one of the things we hear is old supply or old support becomes new resistance, and there is some truth in the sense that a lot of things that were areas of buyers are selling in the market, when price goes in the other direction, they get flipped and they become the opposite. Okay, for me, a lot of times I have a rule that typically zones are good for about 3 hits, right? At 4, we're not looking to get long in an area of buying. I don't care how great it looks. It's been hitting that level, and it's hit that level enough times. So what we do is we expect the zone to fail, right? When it fails, a Harry Potter, and again, if you watch the movie Harry Potter, you know how Harry has a lightning bolt. When we see pullbacks like this, where prices drop down, again, I've drawn a number of different charts before, but when you see something like this level, how prices come down, and then they base a little bit, and then they pull back again, basically all we're doing is drawing a little lightning bolt pattern, is all it is. So whenever I say Harry Potter, I'm just looking, it's just a confirmation entry into a prior violated zone is all that it is. Okay, that's it. So hopefully that explains it for everybody a little bit more than just a lightning bolt. Russell is the weakest. So Russell, last week, again, we expected this zone to fail. That's why we had it yellow. Our targets to the downside were 21,007. You can see that we not only hit it, we bounced from that level, but now it's driving back in, which means, again, most likely going to fail. So tomorrow, this is a scenario where we could use a Harry Potter. It's already hit it before. We knew it wasn't completely fresh. It hit it bounced back up, it hit it again, pulled back up again, and then went down. Here's our 3 hits just right here. What we're typically looking for is a break lower. Now, we are near a psychological level at 2,100. I would say for those of you that are looking for positions, again, let's get some real basing in here, but I'd be looking for something to the downside here. Understand with the 21 there, it may base and bounce. So this may have to be adjusted into this level. But what I would say is look for this to come down, this old level of buying, which would be a short here. Look for it to come down and really establish a new base. Look for it to pull down base and then pull back again. That will give you an established level of risk, and that's where we look to get short. I don't currently know where the base is going to come in. As I said, I don't have a crystal ball, but I do know that the area of buyers here has now been hit already once to form it, hit again, and now hitting again. So every time it hits, there are more and more orders taken away. Pretty soon those will be gone, and it will be an opportunity to take a short out of it. But like I said, 21,000 is a big psychological level. Something like the Russell, we can do it in 25 or 50 base increments. You don't have to go full 100. Just like, we're not using 25s in the NQ, right? Or the YM because they're up in the thousands. Well, this one's only at 2,000. So you can use the same scenario with 25s and 50s. Okay. All right. That's the indices. A lot of action. And again, get down there in those 15 minutes. Look at those before the open. See where the movement is. Today's were pretty easy. You're looking to go short everything. Pretty self-explanatory. Now, let's go over it and we'll go back up to the dollar. And we talked about the dollar pushing higher. Now, we knew we had sellers. And again, this is kind of a nice little push. I'm glad that it based in here and starting to drive higher. I know that I don't have any major sellers coming in, at least up until the 96 range. And really, in reality, this has also been hit a bunch. It's really this 96.21. So I got some room to run. And again, 12:30 on a Tuesday is not where you tend to see reversals. So we got to see where the top is getting pulled with this dollar. We'll see. It's coming in. But as far as looking at the currency realm and how it's affected it, right now you can see, this doesn't look like the same. It's not driving in the same pattern. But you can see from the European session, they started here and have really just driven it down, but it hasn't been an easy run. Really from European session to where we are now is only about 25 pips. So although the 24-hour pip change looks like a whole lot of that was coming in. And this is Sunday. This is kind of the reaction to weekend news / holiday. You can say, well, yesterday wasn't a weekend. No, but we had a holiday Monday, so it has to be kind of handled like the weekend with the pushback lower. So I would say right now, looking at this level, we were looking for some type of a break. We never got it last week, but if I continue this level across, you can see there was kind of the violated zone. And here's our zone. You had 1, 2, 3, 4 is what broke. It pulled through, came back up and grabbed it. So in essence, this Harry Potter that we had planned here just occurred right here, right? And we know we don't really have any buying or anything coming until a bit lower. So I would say as far as the Aussie dollar, what it's telling me right now, it is in a little hiccup here, but I would say we probably have smooth sailing down to 71.56. We got a bit more room to run with the news. And again, we don't have it today, but we know tomorrow we have this employment change. I kind of like this dollar strength. This is technically strong Aussie data. With this pushing down, I would say, we know we have some buying in this range, right at the 71.52, but is it clean? No, it's hit it a few times, but I mean, right now, let's see this lower level here where we had some buyers at 71.27. That is only 45 pips away. For news tomorrow night, the daily ATR in this pair, and actually I should be up on a 30-minute, not this. The daily ATR is, that's 4 hour. Hold on. The daily ATR is 63. So we are less than 1 day's worth of movement from being able to come all the way back down into this level, which was, again, we were looking for a confirmation bounce off of. So again, we know we have Aussie data sitting right there. It's buried in here. Jobless, Philly Fed. It's sitting here. I would say right now, look for this for potential reversals for tomorrow, right? Where's my arrow? Let's see, tomorrow, right there, right? I would say keep that on your radar, 71.27. Look for a hiccup. I say we continue to push down today. We may get a little bit of a hiccup off the buyers here. That would probably coincide with what we see in the dollar index as well. If you're not short, already too late here. But again, this is the Harry Potter. We talked about it. We love the basing. And again, formation of level 1, 2, and 3. This could be 4 and 5, but again, did not pierce it. We were waiting for the pierce to get short. There's your pierce, there's your pullback, and there's your continued short for a 1 to 3 to the downside. And at this point, you're actually up 1 to 4.5. So again, it is rolling through, but there's a perfect example of a Harry Potter from the violated zone tomorrow. So you got that. Aussie yen. Aussie yen looks very similar as well. Late last night, this one started to move. Here's the European Open. Had just been driving it to the downside. We were looking for targets down here at 82.23. We weren't really looking for an entry off of there because of the way that this kind of smacked through and kind of what I would call a mirror bottom, right? They both literally turn at the same exact point at 82.09. Looking for this one short. Now, this is one this is what we're dealing with right now is this level, right? We're dealing with a huge run up in price. We had kind of an old level that we used and we never really saw it pull back to it. It kind of sliced through. It was a level that we were really kind of focused on, but I'm going to remove it now. And we'll remove this short off and pull these things off. And again, another level here that was an old level that became another level again. Let's keep this simple. And I'm going to talk about this level right here because this is kind of the next opportunity we have coming in. And below that, we have a level here, would be our next level on the 30-minute. So these are the two I want to talk about. Price is currently, again, it's past this, so we can remove this target, right? And actually, what's currently where we're sitting. I would say our next two probable or potential buying opportunities are coming in here at 81.85 and then much lower down here at 81.36. So those are two we can mark off. If you want to know how to kind of handle these and trade them, I would say, oops, that's the wrong green. That will drive my ADHD insane. Right there. I would say drop yourself an alert in here. Set it, let's see, 5 pips. Yeah, put it at 81.90. And then set yourself an alert here where we put an alert. We want to know that it's crossing. And let's see, JPY. We'll put reversal first, and we'll see how that one goes. Click on this, and we're going to turn it red, right? So that is now an alert for us. When it gets down there, we don't have to look at the chart. And when it comes down, could give us a nice little buying opportunity. Europound. We talked about being short this one last week. We're talking about the zone, and look at this. Interesting enough, it did actually break out. With low volume trading, it was able to break out of the top side of this, but just barely. And then what did it do? It sucked us all the way back in and pushed us all the way back to the downside where we have potential buying. Yeah, I mean, we're not looking for true buying at this point. True buying is not coming in down here until 83.09. But we had a channel established, and really over the weekend, it just ground its way up, ground its way up, ground its way up, ground its way up. And then again, 8 o'clock today, all the way back down. Pound strength coming back into the market. So the hard part about this one is it looks like so much movement here. If I take this one top to bottom, we're talking about 37 pips. It looks like so much more than that. The range last week on this one was about 10-15 pips a day. Unfortunately, the way that it works, we kind of need more movement than 10 or 15 pips. If you caught this one at the absolute opportune time today, yeah, it was a decent move to the downside. But unfortunately, this has been really more of a gauge on really what do we take the euro dollar? Excuse me, do we take the euro dollar or pound dollar? It hasn't provided this much trading opportunity in and of itself. And again, I can stretch it out and be like, oh my God, look at this. This is so great to trade. But the reality is it's kind of more like this is really what the moves are looking like. The daily ATR on this one is 44 pips, and that's actually better. It was 38 before a week or two ago. So it has increased a little bit, but either way, it's getting a bit harder to trade just because it's so small. So I think Bailey talking tomorrow will be a great opportunity for this one. I'd like to see us find a bottom here and start to reverse back up again. I do think getting short before Bailey speaks tomorrow, and kind of what I'm expecting Bailey to talk about tomorrow is that inflation is still growing, that they're seeing a peak in Omicron, that it's still not really, causing major amounts of harm. His fair balance will be that, yeah, they're seeing some supply chain issues, but for the most part, that everything looks good. So I think it'll be more of a strong pound than it will be anything else. That they've raised it, but the economy's not dying, and Omicron is not causing the problems that they thought it was going to cause. Pretty much everywhere, and I've seen a couple news releases already that the prediction is that Omicron will be peaking. Actually, tomorrow they said the 19th is some of the models' projected peak in the UK. So that should be great for them. So we got to see a reversal up, but maybe a good opportunity. But again, watch this one to trade, the pound dollar tomorrow. Bailey speaking, tomorrow, where is it? CPI first and then Bailey speaking, I think could give great trading potential. And again, if you're up in the middle of the night, I mean, look, it's supposed to be higher. That should bring us some pound strength. And so we should start seeing this one reverse rather soon. Euro yen straight down. I mean, this is all the yen pairs are doing the same exact thing, just heading straight to the downside. This one had an area down here that last week, it just got too choppy at the end of the week. Really never gave any type of a strong entry in there. I was keeping this on to see if we would get a pullback, and it didn't. So it looks like they've evaporated everybody out of there, so we can just remove them. Here was the target for the shorts, right? Right here at 129.72. Again, not an area necessarily wanted to go long. Hit here, dabbled a little bit, but 2 or 3 hits. So this is really kind of where we had our down projection at. Right now, the only thing we have is really kind of another Harry Potter, just a little bit lower with pound strength coming back in. So, this one is not an ideal setup right now. There's a lot of chopping back and forth. I do think we will find, you guys look in this area right here. Look at this. Not a clear defined kind of channel to take off in. It just kind of ground higher. And with this being pierced so much, again, set yourself an alert approximately around 129.03 and look to take this down about 40 pips to 128.60. So, again, I'm an if this then that trader. Not much we can do with it, but I expect some basing in here. And, maybe if we get a clean bounce in here, we get something. Again, this is a level. If you guys didn't know this, there was a level sitting right there. That's what kind of triggered this morning. And again, if you'd use it off this really kind of near term, this is a late night level. And again, this is European open right here to the downside. So it was kind of telegraphed. It was a short either way. I guess let's throw a fib on this one, because again, these were new highs blowing up old levels over here. So we'll draw this kind of a more recent pass. Yeah, there's probably a bit of a pullback right here. There's a 50%. Look, there's a level right here sitting at 50. There's also a little tiny one at the 61.8. So yeah, there's a little bit in there. I'd like to see where the bottom actually kind of rolls out. If the bottom comes down, if it starts to go, and if it goes, as you can see, it adjusted the fib. If we push in this 129.72, find these buyers that were down in this level, right, in the middle of this yellow zone. If I draw my fibs in the middle of that yellow zone, you can see that level of basing that we drew is going to bisect, right? It's going to, the 50% pullback is going to bisect the middle of it. So again, people that are liking fibs are right there, 103.32. Okay, it's a level of again. Remember, fibs is not a standalone tool. People that use it as a standalone are missing opportunity. It should be in conjunction with something else. The guy who created it, that really kind of created it as far as trading purposes go, also said that. Again, you have 2 different systems right there overlapping. Those are the ones you typically look for. Now, euro dollar, it's just following everything else. We had a Harry Potter. We were looking for a break. We ended up getting it. Unfortunately, this one didn't give us a stabilization. I would have loved to say, hey, listen, you definitely should have got short over here. Fortunately, the stabilization level was here. It just sliced through. It never gave us the pullback, and that's going to happen sometimes. There's nothing we can do about that. The next level we were looking for was really a break of 113.22. We're approaching that right now. That was an old Harry Potter level. We were looking for a piece here. With it basing just above, I would say we probably have to adjust kind of what we use. I would say that I would kind of keep my eye on that. So let's remove this one now. Let's look at, we're going to draw fibs here and see if we can get any type of an overlap. It looks like it needs to come a bit lower. For the 50, it's going to have to even go lower than that. So yeah, I mean, right now, I think maintaining short this one is fine. I don't really have an entry that we can grab that's easy. Unfortunately, the pullbacks have been so quick. I mean, we were talking about a short breaking through here. We're approaching that level now. Yeah, I just don't have a lot. I just feel with everything we've seen, inflation, all the problems, I think Euro is still behind. I think this one is justified going lower, especially after the big kind of rally and surge up in price that we had. It's struggling to find a good area of buyers. We have one much lower, but that's still a little bit too far away to really be talking much about. Okay. We'll drag it through. Maybe in a day we'll be able to talk about that one. But right now, I think this comes lower. I actually wouldn't be surprised if we flirt with this level at 112.63. How much space does that go? And 57 pips. That would be more of a tomorrow thing. But yeah, I wouldn't be surprised if tomorrow morning, if we continue to grind, Europeans take this down to much lower. Gotta hate that when there's like no real great setups for it. Pound. So again, pound is rolling back again. As I said, we've seen pound strength in there. We've seen the pound blowing up the Europound this morning. But you look at this, it's amazing. You look at the Europound, you're like, my God, there's so much pound strength. And then you look at this pound yen, you're like, oh my God, there's so much pound weakness. Really, all this is the yen. This is the yen driving through. You can see that the level that we had here, and again, whoops, I didn't want to move that. From this original level, nice pop. Again, it got hit last week and kind of end of the week. Unfortunately, this is what happens. This is where we ended for the week. It was too late to get into an entry. You can see that it is also messing with the same level here and kind of went through. I'll delete it though, just to kind of keep this one cleaner. This level, I probably should keep that, but I'm gonna we'll push this across. There's buyers there, but I don't really love the buyers down there. You can see it's reacting off of them in both places. Yeah, it's these buyers and they're hitting them. But we got two decent hits. Let's see. 23 is an issue. You can see that right around the 50, we also have basing in there. So from this morning, European session is here. Here's the overnight sell, right? There's the push, there's the base, there's the pullback for the European session. So it was tagged as a short this morning early on. Interestingly enough, this 1545 though does become kind of the bottom. I would say as far as reversal goes, there is something sitting right here, right? There is a level of basing, strong push in, level of basing, and then strong push down again, right at the 50% retracement. If this is the true bottom. So we'll see. I would say keep this one off. And again, if you know how to set alerts, set yourself an alert for approximately 56.10. That'll give you a little bit of space before it gets back to that 50% retracement level, but could be a decent short later on the week, particularly with Bailey and CPI tomorrow coming through. Pound yen, again, you look at this and be like, oh my God, there's so much pound weakness. Where did that Euro pound chart come from? This is the dollar. And again, we're seeing the dollar rally. We talked about it. We had targets down here. This is where the target was at 113.65. Actually, if you look at where the actual target was, there's 113.65. You can see that's what we've been chopping through. So the level that we're hitting right now, again, we expected something higher. We knew it would give us a hard time. It was here confirmed. Here launched itself off, and you can see it's having a very hard time touching through. It's probably due for a reversal. Like I said, we're seeing the pound strength come in. We have not seen the dollar profit taking happen yet. Problem with this is this level was pushed to the brink by this last candle. Yeah, strong push out, but we knew where the original level came from. If you look at the next level lower where we had a strong push higher, look, 1, 2, and 3. So it's kind of like, oh, there's not really a great level to say, hey, go long here, guys. There's a decent one down here at 134.32. It was a big pop off and it barely touched it and took off. This is another level, but again, I don't like how it was getting lower and then finally went. So A lot of chopping here. I kind of almost hope it gets a blockbuster U.S. news and it just slices through all of it, so we have some clean data again. But this is unfortunately, when you look at all this data back in here, where these levels were formed, it was at the end of the year when we were under low volume trading, and then this was the first week trying to find levels. So, kind of need good levels to be able to draw much, and don't really have much in here. But yeah, this is the level we expected there to be a hiccup from. Now, if we do start to see it rally back up again, and we do start to see higher highs and higher lows, yeah, this could be a level, but I would wait for some type of a confirmation. Wait for it to come into this level and mess around a little bit, and price needs to come up. If you're gonna look to go long, price needs to come up above this level and put a new high. If it comes to here, again, it's just a corrective move, right? Waiting for that big impulse. If we start to break above these levels, then that's where you can look for it to pull back and not, again, look for it to kind of use this level as an area where we can go long. I'm not saying this is what it's going to do. I'm just saying if we do suddenly get the, price starts to rally and it goes above these two peaks and potentially messes with this third one, those tend to be really good signs that you're going to have a trend reversal. And we are due for one, but again, the dollar can stay in strength mode for a while. But what we've seen over the last few months is we have a first day of dollar whether up or down, and then it spends the rest of the week reversing. So again, I do think we have two news releases tomorrow with great pound data, so would not be surprised for any type of reversal in the dollar CAD. So dollar CAD literally been chopping back and forth. Our target at 125, we hit it. We kind of peaked below it. We based in it again, went above it, based in it again, ran through, again, hit the top, based in it again, based in it again, based in it again. 125 is an absolutely huge, psychological level. Where we're at right now with prices pulling back, I mean, this was an old level that we're looking at before, right around 125.75, right? We've seen price turn around. We're sitting there now. Dollar reversal comes in. We start to see it turn in some of the other pairs. Again, I would stay short, but overall, I think I kind of want this to put in these tops in here. I do think with the data that we have with the CAD this week, I do think we see dollar move or CAD movement to the downside. I think we have CAD strength coming in. I do think they're going to be the next major country to raise interest rates. So I'm really, again, my overall target is going to be down to 124, at least a first stop. I know, we have buyers that at 123.80 to 123, really that entire range, 123.08 to 122.87, that kind of 20 pips down there is really the next major buying level I have. I'd like to use that as a target. But again, we'll take this one down. This is really my next target for later this week, right? I have to say I'm a big bear of the position. Not that I think the dollar is weak, but I think that the CAD is going to get some love and get some acceleration. And again, oil up at 85, 82, right? You're seeing oil surging. That should be bringing a lot of power to the CAD, and it's not. We're seeing that decoupling. But when we saw the decoupling last time, it did play catch up and did start to really kind of go crazy again. So I think we will see that. Dollar Swiss, again, we're dealing with this right now. There's not a whole lot in here. Once we broke through these highs, we had pullbacks. It's got to grind up to 92.34. We had a great little Harry Potter over there, and it just blew through everything to the downside. So, but right now, I mean, I'd say, I don't know, there's probably maybe a little hiccup in there. Maybe a hiccup right here. Again, I had to drop down to a 15. You can see it on the 30. It's part of the pullback, the punch in, the pullback, and then the big push down. We've mentioned dollar reversing a few different times here. 91.94, right? Could be a potential reversal. It would probably run 1 to 3 wise, run us back into levels down here at 91.47. Actually, let's just put there. Yeah. I mean that's a fine little pullback. So like 11 pips risk, so not even a big trade. But this would coincide with what we've seen in the other pairs. Dollar yen. So dollar yen may say, well, wait, we don't have anything. You're right. Last night they in low volume, they drove it higher, came back down. At 9:30 today, you saw almost no movement whatsoever. Why? Because unfortunately the news brought dollar strength as well as yen strength in, and it's just a fight. It's just a battle. But I will say, overall, if you look at this, you can see that we have lower highs, lower highs, lower highs, lower highs, kind of forming a trend right there. We do have lower lows. We don't have 3 touches on it, but you do have 2 in kind of the near term, so not perfect. Again, they're kind of more leveled this way than anything else. You could have a 1 touch, 2 touch, 3 touches. But I'd say in the near term, I mean, you know, if I use a peak there, it's close. I would say I like this one more for Harry Potter. And the reason why is because I think the more deterioration we have in the overall indices, this is a level where there's basing. They used it here and took off. And then, you know, again, whether you use this or this level, you know, you arguably you could say the takeoff was the level. You could say here, you could say here, you could say the next hit. But I do think we have a Harry Potter setup here because I do think there's more kind of red in the overall indice market. And again, the dollar, remember, the dollar is strong right now, right? The dollar is strong versus everything except the yen. So when the dollar reverses, the yen is a byproduct. It's not necessarily anything for the yen. And some of the data, I guess, out of the yen, I guess. If you look down here, you can see that them talking about we're on track for recovery. We got more room. They actually had some positive data. But again, the yen typically is not a driver. I had it in here a second ago. I had it up on one of the other ones. Jonna, here you go. Once supposed quasi-emergency in some regions. No, that's not it. I saw it in here somewhere. But basically, they got room to run, right? They got some room to run. So I do think when the dollar reverses, I think, you know, again, I think the indices will stay red, continue to drive power to the yen. And again, watch this one drop. This one would be basically a break of 114.45, and you'd be looking for overall targets. And again, I agree with it. Profit taking should come in on this one. Oops, not that. I don't want the ray. I just want the horizontal ray. Profit taking should come in right at 114.16. So it's perfect, us being at 114.18 is our overall target. Okay. So good on that one. Looking at the cryptos, again, just kind of cycle through things. You know, cryptos, again, they didn't really have much reaction today. They're just continuing to deteriorate lower. They had rallied back up into the 44 range, but now we're back into the 41.5 range. Again, I think overall we were looking for, you know, 40 to be tagged again. And, you know, it's one of those things I kind of hate to say it. You know, we talk about like a parallel channel. If you're using this as kind of a trend line for your top, you can kind of see on the bottom side, look, 1 touch, 2 touches, 3 touches. You can see a bunch at the top. It's projecting to go back down to the 40 range. And again, I don't know what's positive out there. Remember, interest rates rising is kind of like a risk off. You got to put it back with a little bit more secure data. Bitcoin is considered a risk on type scenario. So again, it's holding a little bit better. Ethereum is down 3.25%, but kind of the same thing. The channel is a little different, right? The channel is faster, right? But it's kind of the same idea, right? You're hitting the tops and bottoms of this channel going to the downside. Dogecoin, even after the manipulation last week, I don't know if anybody saw it. I have one person that follows me on Facebook, or somehow I think I did jujitsu with the person. He's all about Dogecoin and how he's going to be a triple, quadruple billionaire just because he owns Dogecoin. He's one of those people that had to put his post up with his sales confirmation, right? That he bought the Dogecoin only Tesla merchandise, right? I think he bought it when it was over here, and now it's worth less. So Tesla, I'm sure, is extremely happy that, you know, they spiked the price up, told people they're going to have the special merchandise. Those people bought it over here, right? And now it's worth less for Tesla. So great business investment. Yeah, so we'll see how it goes. TLT is also down. You can see the bonds are also deteriorating at this point. So really, everything's going right back into the dollar. Yeah, kind of weird. So let's look at commodities real fast. We've got just a few more minutes. As I mentioned, I expected a pop from the open. We got a little pop and then a little bit of a pullback. So they're still trying to find that. 85.80 is where we're at right now with oil. I would say oil later in the week is probably going to be a better buy. It is going to be a target for everybody right now because it's like, oh, inflation, now you must mean oil. But again, we know OPEC is not increasing anything. I think oil definitely has the ability to go higher tomorrow, starting with the European market. Looks like today they were kind of mixed with it. But again, you know, we saw last week with the US data, you know, energies was not the major cause anymore. You know, if they start saying that Omicron has peaked and we're starting to see, you know, less of everything, that's a big driver of demand. That should be great for oil tomorrow. I know it's not an oil release. The inventory report's not till Thursday, so it's a little bit funky this week. It's a great opportunity. I'm telling you right now, because if they say, wait, it's peaking in the UK, you know, this week, when is it peaking in the United States? It's projected at the end of the month. Oh my God, that's only like a week and a half, 2 weeks away. Man, that should drive demand higher. And OPEC's already said they're not increasing in February. So I would say I don't like oil up here. right, for a personal basis, but on a purely technical basis, if we can find buyers here or find buyers even a little bit lower, particularly for tomorrow morning, look for this to pop and go higher. Natural gas, again, we've had storms. Natural gas is higher 0.7% from where we were. This was kind of a weird one. We were looking for a buying opportunity. Unfortunately, it ended kind of in after hours, so we didn't get much to trade with it. There was our weekend gap. Here was from the 14th, and then we opened on the 16th high. All it did was come back down and grab it. It's kind of stabilized. Again, anytime there's major snowstorms and things like that, you typically see a little bit of delay in natural gas before it spikes higher. The winter's not over yet, so again, keep your ears out, eyes and ears out for headlines. I think they're there's potential to go higher. It is a little bit choppier, a little bit more fuzzy than kind of what oil looks like, but I think there's some opportunity. Now, gold, there was a great little entry this morning, right? Super early this morning, there was a pullback into it and dropped, and then again, the news here at 8 o'clock, it kind of hit our entry level and dropped this, and then went all the way back up again, and then again, it's a parabolic retracement move. I'll drop it down on the 5 minutes so you can kind of see it. Here's the level of basing we were talking about in the European session. We actually had the Harry Potter over here. You need basing for it, and that's where the basing came in. We're looking for the basing. There was your basing in the overnight. There was a drop. Here's your Harry Potter signal, right? Drop, base, pull back, grabbed it, didn't break it, boom, 1 to 3. Came back up before news, touched it, boom, dropped this down again. Parabolic move because of the news, right? It got driven down. 8:30 kicked in, drove higher. I told you guys it was a parabolic retracement, look for a reversal, and that's exactly what it did. It is now sitting back below from where the open was for the day. It's down 0.38. So totally predictable, hasn't really changed its trajectory much at all. We're still kind of in that same range. We are shooting for 1800 to the downside still, and I think we will get back there once everybody kind of absorbs it a little more. Silver, kind of the same thing. Silver came up, and we mentioned last week that 2362 was really where we wanted to see the reversal. When we did the Nadex presentation earlier, you can see right here at 9 o'clock, we were talking like it's got to go a little bit further. It'd be nice if it did, and it did. It dropped and went higher. It tagged it at 11 o'clock, that 10:30, 11 o'clock time frame. It is now pushed lower. Same thing. I think silver at this point is, you should already be in the short, but I think we come back into that 2290 range. So, yeah, it's there. Like I said, we're waiting for the reversal. The reversal's in. We've already moved. At this point, I don't even know. It's probably out of the 1 to 3 range already. Maybe not out, but it's close. Yeah, 1 to 3 is sitting right there. So it's almost done. The short is almost done. And again, makes sense. The buyers are sitting there. But I look for this one to roll in the overnight all the way back down to 2290. So is what it is. Yeah, I mean, right now I would say that there's really not much else there. I mean, everything is pretty much doing what it's supposed to be doing. VIX is still creeping higher, and again, why? Because again, now we have NQ and Russell both at 2.7 and 2.8 respectively, and then ES is hovering around that 2%. So the fear, again, the snowball is getting bigger from the fear of these things being 2% down. Again, all predictable. I hope to God you guys got short at the open when we gave that call this morning. So. Again, wasn't a recommendation, but this is kind of what the prediction was because of Empire State and retail traders didn't get an opportunity to trade it. And again, it's just getting worse and worse and worse and worse. Hopefully that means it's better and better and better and better for you guys. So we will see. All right. So with that said, that's it for us today. Make sure you guys mark off your calendar. Tuesday, January 25th. We'll be back on the same time. Like I said, watch these news events. These news events have been predictable again and again and again and again. It keeps getting, I don't know, it's one of those things that it just keeps happening. So if you're not learning from it and you're not understanding it, it's just because you guys are not paying attention. So mark your calendars, mark your charts, start setting your alerts. Make sure you know when price is coming up. Make sure you know when the news events are coming up. Use whatever you can. But again, these have been all predictable, and that's what trading should be. High quality levels into predictable times of volatility around news events. So check those economic calendars out. With that said, here's my email address. Whoops, I went a little too fast there. If you have any questions for me, support@keeptradingsimple.com. I will gladly answer anything you guys want. Check out the website if you want, keeptradingsimple.com. And thank you guys for joining today, and I'll see you guys next week. Take care.